Good morning, everybody. Happy Friday. We'll get started in just about 4 minutes. The sun is setting on get my cares out, working in towards the blue. Yeah, me and women, all got easy. It's beautiful, just like yesterday. Got the shrooms in the cup of Joe. Yeah. Need everything I can do to get smarter. Morning, Chris. With the love song, yeah, you listening, yeah, yeah, it was a perfect day. It's just paradise. Up and down the coast, couldn't find sunsets, baby, on the wind. So I came back where we started, just to be close. And it's just love that opened up there. It don't feel like it's just about 2 minutes before start time. Glad to have everybody here. Going to be a happy Good Friday. The rain came pouring down. Being like standing there with a silver crown. Had to pull off the fishing rod, tack on our backs. We just stood there getting wet with our backs against the fence. Oh, it don't rain all day. Yeah, it's gone late to my soul. So we just like Jelly Roll. And it's gone. It is gone late to my soul. So we just like it is. Hey, good morning, everybody. Happy Friday. Well, we have the January effect. Looks like it's in full bloom. Markets, oh, well, let's just double check that one. Everybody needs to know what the January effect is there. January effect is that where the markets open January 1st, if they are higher by January 31st, tends to lead to a bullish move in the markets. Okay. So for the rest of the year. Now, that doesn't mean we can't have a pullback, but it does imply that year over year from the Stock Traders Almanac that we do see that when January 31st closes higher than what was on the first or the beginning of the first trading session of the year, that the market is a little bit more bullish going forward. Okay. Good morning, Liz. Good morning, Chris. Glad to have everybody here. If you are watching on the YouTube channel, please use the chat box if you have questions. Our team is monitoring all those questions and they alert me if something comes up. Please ask questions, okay? We're here to help everybody achieve their goals and just help see the charts, price charts, and read them. And, you know, it's really just a group of traders helping traders, okay? So, again, happy Friday, January 31st, 2025. We did have earnings from Apple came out, and it was implied that we would get kind of a big boost to it. Now, we are up a little bit in the pre-market, but there's not a lot of energy behind this at the moment. One of the things that I do want to point out, and I'm going to bring up over here another chart. This is one of my first red flags, right up in here, this whole range, okay? US dollar, 10-year and a 2-year yield, okay? Now, when watching what's going on here, you can see that the dollar was moving up in the overnight session, and we can see that the 10-year, 2-year were moving lower, okay? Now, what this means for me at this moment and what I'm sharing with you is that when the dollar and the yields are not correlated, this can lead to a much more choppier market open. Okay. Now we do use the inside day versus outside day as well to kind of anticipate that. We do see that the NASDAQ pre-market indicator is gapping up. Okay. So there is kind of a bullish move to this. Okay. The trend is low. Close was at 1583, currently trading down about 50, little over 50 cents, 53, 54 cents to the downside. Okay. More complacency, no fear. Okay. Which is often kind of an alert. The more complacent that traders get, the more we need to be prepared for a change. Okay. The pre-market trend was a little higher, but it's right there in consolidation mode. Okay. So first indication that we're looking at, just kind of pull back on the range a little bit here, is with the equity indexes in particular, is seeing the dollar moving up and seeing the 10 and the 2-year yield moving down. Now, I'm bringing this up to give you a chance to where you can verify that information to see if it fits into your trading plan. We did have Michelle Bauman come out and speak at 8:30. The market didn't react much from these announcements at 8:30. Okay. Now, generally and historically, we have seen some big reactions with these numbers that come out at 8:30. Okay. Employment costs, personal income outlays, and so on. Okay. 9:45, we have Chicago PMI coming out, and then pretty much quiet the rest of the day as far as economic reports go. All right. Yeah, okay. So Apple was up 4% in the pre-market, NVIDIA down. So Apple up, NVIDIA down often leads to a choppier market conditions, which kind of support what we were seeing over on the dollar and the yields. Okay. Our metals market is just a ripping to the upside. Gold making a new high. Caution on this, don't try to short it at the moment, is that we got a high tight base. Okay. Now, what we see with the high tight base is this is often a continuation pattern. Okay. And what do we refer to when it's high tight base is price doesn't generally retrace greater than that 23% retracement, often likes to hold it. Now, this could turn into a continuation pattern by looking at how many times price bounces back and forth. Okay. So if it becomes a high tight base, you're going to see that price will go sideways for a period of time. Looking at the pivot points within that range, holding the 23.6, we look for 1, 2, 3, 4, 5, 6, and then the breakout on 0.7. By that time, the 50 moving average should catch up to price, and then we could use some Fibonacci price extensions to anticipate the new highs here. Okay. So gold is moving up. We did have on our watch list also a little more movement, high type base on silver, looking for a little bit of supply around that 33 12, 33, 32 on silver. Okay. Markets are suspiciously quiet. You know, for those reports, economic reports coming out, we should have seen a little more reaction. Since we are right about 5 minutes after the pit open, we'll start to use the open range breakout trade for crude oil. So let's set up crude oil now. All right, so we got crude oil. And let's change the colors on this so we can see what the open range breakout. Now, if you look down at the little diagram while I change colors over here, you'll see my intent for direction of the open range breakout. Now, I still need, I mean, some additional uh, help from heating oil and gasoline. Now, heating oil and gasoline charts are generally lead what happens on crude oil. Okay. Right now, they're kind of choppy. One thing to notice about, looking at how choppy that market is to see the Globex range, which is a 108, compare that to the daily ATR. Okay. And with the daily ATR at roughly about $2, okay, we got 108. What that implies and what we've documented is when the Globex range is within 40 to 70% of the daily ATR, it can be a little more choppy at the open. Okay. The price pattern that I'm looking at, price consolidated sideways. Okay. And I'm looking to take the open range trade to the downside, 72.82, using 73.04 as a protective stop loss. Okay. Now, that's solely based off of a chart pattern that I'm looking at. Okay. And I just want to kind of get that picture. This is often where we see a price drop, we see that continuation. This is on a bigger time frames would be what people would use as a drop, a base, and a drop. Okay. So I'm going to set this trade up ahead of time. I'm going to use the 72.82 as an entry. Okay. And let's get that right there. We'll start with some micro contracts. And once filled on that, I'll come back and place a protective stop. Now, this could go up. So choose your direction based off of your trading plan. Okay.
Order filled.
The crude oil daily chart, you can see that there was a rally, the base, and a rally, and prices come back down, and it's just been basing on top of that. Okay. So do your own research. Look at the larger time frames. Price could be moving to the upside. I'm anticipating on a small time frame that we're going to continue to go lower. And let me adjust this out just a little bit more. But with expectations that because of the Globex range compared to the daily ATR, things could be a little choppy here at the open. Okay. Now, you could be prepared to take the open range to the breakout to the upside as well, but I am leaning a little more to the downside based on the pattern. Okay. Now, I also want to bring up natural gas, where I already have an order pending, waiting for that. One of the things we notice with natural gas is that very often, right around the pit open. Okay, so pit open is at 9 a.m. Eastern. Okay, and now what we measure is from the Globex high to the pit open. We often get about 50% of the daily ATR. Daily ATR is about 28 cents. Okay, so we did go down about what, about 14. Okay, so that was a good projected area to look for once you had the established Globex high. Okay, for price to find a few buyers, or basically just kind of stabilize to find an area for the pit open. Okay. Now this could go to the upside. That's why I have the yellow box there, from the pit low, or sorry, Globex low to the upside. Also a projected move. What you do with this information is you say, well, hey, you know what? Out of the last, I don't know, let's just say the last 20, 30 sessions that we've had, okay, and it goes back a lot farther than that. I'm just kind of using this, is that from the last 20 or 30 sessions, we noticed that right at pit open, that natural gas is about 50% of the daily ATR. Noted. Okay. So what do we do with that? Well, if you're starting a little bit early, then you can project down from the Globex high or project up from the Globex low, and then anticipate, you know, and this is prior to the 7 a.m., okay, open, or sorry, the 7 a.m. where the big players come in, okay? Um, that average move down. Now you would correlate that looking over to the left with a demand zone or a supply zone up on top, okay? So let me adjust that down. I wanted to take the time to help you see that, because this will help you then work on where you're going to look for trade opportunities as traders come into the session about 2 hours prior to the pit open. Okay, we can use that range to kind of look around. Oh, I like that. Boy, that was a long time ago. And Dendi just sent me a picture from some of our students over in Singapore and Indonesia. There, this was a while back there. Must have been a Friday night too. Thanks, Dendi. Good to see you guys here. All right. So a zone entry, looking at 2.967, 2.949 on nat gas there. Okay. Quiet market's really unusually quiet. All right, let's come over to the S&P and the equity indexes. S&P did rally up into a supply zone that we had marked yesterday towards the close. I took a shot at it. Looking at the S&P as where we see the prior sessions range, and we can see where the gap fill is at. It's way down here, okay? Now, should price open outside of the prior sessions range, and we're talking about the regular session open, we'll expect kind of a gap and run, price moving back up, okay? Should price open inside the prior sessions range, we're looking for that gap fill with a high probability, okay? We're also monitoring what Apple and NVIDIA are doing in the pre-market, and they're going opposite directions. Okay, so Apple and NVIDIA going opposite directions, as we talked about earlier. The dollar's shooting up, and the 10 and the 2-year yields are still pretty quiet. Okay, now dollar going up is generally bearish for the indexes. Okay, normally. Okay, there are some times when there's a little discrepancy, and that just tells us, hey, we need to be waiting a little bit. Okay. So we're going to be monitoring that. I'm going to come in and adjust my stop loss down. There we go. Our job is not really to go out and just say, hey, there's a bunch of, have a bunch of big numbers, trade hundreds of contracts or big size on this, okay? Our job is to start showing you and teaching you what we're looking at in the pre-market to help you identify a trade opportunity, okay? Our main purpose here at the Market Institution is to teach and train the eyes of students, okay? We're not a stock picking service or a recommendation service, okay? But, we want to prove ourselves in the live market so you can see that we're taking the same type of trade. So this trade entry was from a tick chart. I notice just here on the 5-minute chart, we do have a leg base up on top. Okay. And as we're looking lower, yeah, my target range is right there at that gap fill. And currently we have about $25 risk on 5 micro contracts. Okay. Now, if you enter now, your risk is going to be higher. So that's not what we're doing. Okay. All right. How many folks have gotten into the crude oil? Okay. Now, once price moves out, I'm using I'll use the pit open, that range. Now I'm bringing into my view where I want to adjust my stop. Okay. So once price moves out of this 1-to-1, okay, then I will adjust my stop down. Currently on this, so we're trading 5 micro contracts. Okay. We have $117 worth of risk on the trade. Okay. And we want to minimize that risk, but we don't want to chase the price down too aggressively. Price could pop right back up and then stop us out and we miss the big run. So have a good trading plan on how you're going to protect your profits. Okay. Good morning, Callie. Yeah, let's get another trade like we did last Friday, huh? Well, if we're going to do that, we better find that darn demand zone down here. And it looks like we need to go a little bit lower than this. Back. There we go. Here we have that leg base in the right area. Looks like right. That's a Globex range. Okay. And we have another one down here. Now, what I'm looking at and how I choose the zones is I'm first finding resistance or support. Okay. And there was a resistance area. We have a leg base down below. So this becomes our buy territory. Price made a lower low before taking out the sellers. It's a very methodic place where you're looking for a zone versus just a leg base group of candles. Okay, so our profit target 71.49 at this moment. Okay, with the stop loss as we've already described. Okay, the picture that we're going to be watching and waiting for. And let's see. I'm using this as a reference and as a map. Okay. Now with this particular price pattern, we can look for using from low to high a Fibonacci price extension. Okay. And this price pattern is generally in front of a pretty sizable move, getting to the 127, 1618. A V-shaped pattern would be 224, 2618, and a 314 extension. Now we're going to target the Fibonacci price extension that lines up with the zone. Okay. So that will be our price target and where we'll look to hit that reverse button. So already starting out with a good little trade. Again, once price gets 1-to-1, I'm going to reduce my risk by about 50%, going from 117, and I'll bring that down to about $57, $52 to reduce the risk on that particular trade. Okay. All right. Let's see. Nat gas. Okay. Just basing out. NASDAQ. Look how quiet these equity indexes are. And that, you know, the next economic report is going to be right around 9:45 a.m. Eastern. Okay. We have made a resistance here. We do have a potential buy territory in this range. Watch where price is trading relative to the prior session's range. Okay. Now, don't be so focused on trying to make a trade right now. If you're new and watching what we're doing here, be a little more focused on what is he looking at to make a trade decision, okay? And please ask questions along the way, okay? Good morning, Dendi from Jakarta and Singapore. Saw that. And good morning, Matt. Boy, your charts in the Discord room, oh man, amazing. And thanks for posting in there. Uh, it really kind of got me thinking about other things in there over the weekend, and I did respond to you a couple of the questions that you had. Just to mention, if you want to be part of our Discord room, much of the time in our Discord room, there we go. After we do a live trading session and we're just kind of casually hanging out, we're in this active income trading. It's a voice channel, so we can talk and share charts and stuff like that. And there's a lot of folks in there. We do have other things on our Discord room, active income chat, where we kind of share trading ideas. Oh, there you go, Matt. All right. Beautiful charts. We have a lot of student sharing, and Matt has done. I just want to give a shout out to Matt. Matt has done an absolutely amazing job posting a lot of stocks, but he also trades futures and forex. So if you want to be part of our Discord room, you can look at. We can post a link in the chat for you, and yeah, if we can do that, team, we'll post it on the YouTube channel and on the right here in this chat if you're in our subscriber list and have not put on there. Okay. All right, Dow. Okay. For the Dow, I did take this trade earlier based off of price going into the prep screen zone. Now notice price hit the proximal line yesterday and we got a nice pullback off of it. Okay. And then price went a little deeper into the zone. This is often the characteristics of when we can use a zone twice, and that's based off of what the leg base group of candles looks like. So if you go over to the left-hand side of the chart and you start finding that leg base group of candles that I was using, okay, we open it up, okay, you very specific group of candles, you'll see that the leg candle leaving is much bigger than the leg candle in the zone. That is our first clue that we can use the zone twice. Often, very often, the first test of the proximal line is a good little trade, okay? But you're only looking at a 1-to-1, possibly 2-to-1 on that. Sometimes you get a little bit more. But the second test, price usually goes a little deeper into that zone, okay? And as we come back over to the right side of the chart, we can see now that that zone was used twice. First test went into, touched the proximal line, and the second test went a little deeper into the zone. Now, what that does for a trader is helps manage expectations, okay? The expectations is, oh, that first test based on the leg base group of candles, I can only use that for short-term and often a counter trend trade. Okay. The second time price comes up, goes deeper in the zone, we take it as it transitions out. Okay. Can often lead to a much longer running trade. Okay. Price has moved out about 1 to 1 of our zone. Let's just double check. Okay, so I'm going to reduce the risk on my trade now by about 50%. Where did I put my stop? 75. There we go. So reducing my risk risk was $100. Now I'm going to reduce it much lower. Okay, to about $50. Yeah. Okay. There we go. So we reduce the risk. We have $50 risk on that trade. Our crude oil trade, if we moved far enough, we haven't moved enough yet to adjust that stop loss. Now to Russell. Russell has been consolidating within a range. Looks like that range is 1, 2, 3, 4, 5, 6, 7, 8, 9 days. The Russell has been going sideways. Now, this low volatility leads to high volatility. Okay. We often see when price goes in a tight range for a period of time that we get a break above or a break below for a very sizable trade opportunity. Okay. So watching the Russell, okay, right now it looks to be a little more bullish to the upside. Okay. But I am very suspicious here from the daily chart. This has one of those price patterns that we're trading right now with the crude oil. Okay, notice the 3 touches. We also have a buy territory below. Okay, that tight consolidation that we're looking at on the tick chart. Okay, kind of could go both ways because that tight consolidation can look like a rally base rally also. Okay, but what we notice here is that we're prepared for a long and we're prepared for a short, okay, based on the overall trend. Okay. I mean, if you look, kind of step back and just kind of look, wow, we keep making higher lows and we're making higher highs. Okay. So this doesn't necessarily mean that short this, okay? It just means that, hey, we have potential trade setup. And I'm monitoring that now. And on the smaller time frame, we have some additional trading opportunities. Okay. So a breakout to the upside, we've got a nice big pocket of points. Okay, a good stretch where we should not see much resistance up to the prep screen zone. Thank you, team. All right, pre-market here. We're still looking at the internals. We see the trend is high. Well, not really high, above 1.5 and above 2. It gives us some good trading opportunities. Okay, we're kind of in the middle of that consolidation. We're seeing it, the VIX down 52 cents in the pre-market. We've got session open right now. Bum, bum, bum. Yeah, on the 500 tick
Order
chart,
filled.
we're still in crude. We just got into the Dow. We were already in the Dow. Oh, stop out. All right.
Order filled.
Okay. Everybody's kind of looking for something big to happen. I do want to point out NASDAQ opened outside the prior session's range. So we're not leaning so much on the gap fill. Okay. Still could happen, but it happens less often, okay? When price opens at the regular session outside. So we're going to look for price to continue on up. And it looks like we got stopped out on the S&P. Okay, so Apple gapped up. And we're just kind of waiting to see how the stocks start to perform. A couple of things that do want to mention. In the pre-market, the volume on the Dow 30 stocks was very light. Okay. S&P also gapping outside the prior session's range. Reminding everybody, okay, that when we started our session, okay, we started with a look at the dollar, 10 and 2-year yield. This is one of those big indications to wait a little bit longer, not be so aggressive trying to trade. Okay. I just want to remind you that that's why I'm doing a little more teaching and approaching the market a little slower, mainly for that reason. Okay. All right, let's take a look at where we have Dow. Okay, price did come up and retouch that. Has not come back and filled the gap. Russell has filled the gap and come back down to support. Yeah, I think I'm going to take a shot at the Russell here. Overnight, it held this area very strongly. And if we look real close, you can see that there's a leg base. Adjust the time frame up or down so you can see it. And let's come over to our tick chart. There we go. Okay, now we have a better picture of that. And I'll use a little wider range. All right, Russell, looking at a tick chart to splice into what we are potentially could see on a daily time frame or higher time frame with price rallying and continuing to move up. Okay. So if we're going to plan for this trade, let me get my prop account set up as well. Going to start this out with just a couple of micros. We may have some other areas where we will add on to this. Okay. Now, real quick, locate the leg base group of candles. Okay. Make sure you have the right picture because we want to know is this zone a proximal line entry or should this zone be used a couple of times? Okay. So by looking over to the left, and let's put our little blue candles on there, our blue dots. I want to find that leg base group of candles right there. And it does show that the leg candle leaving is bigger. Okay. We got the leg in, the base, leg out, and base. So leg candle leaving is bigger. Price got a bounce off the proximal line and went deeper into the zone. Okay. Very specific rule-based trading. So I'm willing to take the risk. We'll start off with 5 micros here.
Order
As
filled.
price is leaving the zone. And then I'm going to come back in and place my protective stop loss at 312.60. Fully recognize I have $92.50 worth of risk on the trade. Okay, now if that's within your trading plan or outside your trading plan, okay, always assess and verbally acknowledge what the risk is on the trade. Okay. Now, why I'm being so heavily on the risk on that trade is that when you're trading, even in your prop accounts or trading in your regular account, okay. And I do want to mention there are some announcements in our Discord room of the prop firm we're working with right now. Okay, so go and check all of that out. You'll see a lot more little live stream classes coming on explaining what we do in February. So there's a really good good opportunities there to get a little more of an understanding of what we do, okay? Knowing what your risk is ahead of time can help you properly size the trade, okay? And in sizing that trade, okay, you can stay within the parameters to make your trading a little more consistent with your risk, and then also looking for your profit potential. Profit potential on the Russell here, looking at the small, I need to go back out to my large time frame and kind of see what's in front of me. Okay. And as price is coming off of that gap fill, okay, things may be choppy until we get above the prior session's high. Breaking above that, then we're going to target that 2375 area where we have our prep screen zone. Okay. Now the potential reward is going to be pretty phenomenal. Okay. The risk is still 92 bucks at this moment in time. Okay. All right. So we'll let that one work. And if you're doing some short-term trading on this, we do have a nice little pattern here going from low to high, and we have our ABC pattern. Okay. We have noticed that this ABC pattern has been popping up quite a bit lately. Okay. Now you take the A point, the B point, and a retracement back down to C, and then we have a target 1 and target 2. Okay. So we'll come back and watch this one later. We still have a lot to cover there. Woo, there you go, Callie. How about that? Another happy Friday for you. We have moved out of the crude oil open range breakout trade, and we've gone more than 1-to-1. We're almost at a 2-to-1 now. So let's take the risk off of the trade. Okay. And I'm come down. I'm still planning for 71.49. This is a pretty high probability. Okay. So I adjusted my risk to cover my, well, got to go down another tick to, there we go, cover my commissions on the 5 micros. Okay. The intent is price to pull back, and we're looking at potentially going long or hitting a reverse if we get down to that 71.49, 71.30. Oh, nat gas got a nice little pop off of there, but not from a zone. All right. And we got gold being quiet. Okay, so here we have our exchange traded funds. Now, we posted a couple of charts out there this morning talking about the different types of gaps. Okay, when price consolidates sideways for a period of time, a gap above that is what we call a runaway gap. Okay, usually a runaway gap is a little bigger. Okay, and we have a little more consistency in the resistance area or the support. Okay. Once we have 3 touches, we're looking at more of a breakaway gap. Now, the distinct difference between a breakaway and a measuring gap is that a breakaway gap often retraces back into about the middle section of the gap. Okay. Sometimes it can fill it as well. When we're using this information, especially on the SPY, is that we don't want to trade against what the exchange traded funds are doing. Okay. The exchange traded funds, okay, are what lead the equity indexes. Okay. So SPY is getting a pretty strong move. It has, we had 3 touches, price consolidated sideways, then gapped up. This often leads more to a gap and run. Okay. So let's see what we can do with the S&P on this, anticipating that we already used that zone. Now, notice that when price hit that zone, there wasn't a big drop. It was just a small pullback. okay? Now, going against the overall trend, we call those counter trend trades. And when you're going against the trend, you're often going to see just smaller pullbacks. Now, a lot of folks like to take the counter trend trades because every once in a while you get a big reversal, okay? But um, it's more elevated risk to stay in those trades too long, okay? Back to the larger time frame, S&P gapped outside of the prior session's range at the session open. It's more of a gap and run. Okay, so we have that scenario. Now we got to find a way to merge into that large time frame expectation. Okay, so we'll do that by finding a resistance. Oops, I want that red. In 3 minutes, we have an economic report coming out. Make sure you're prepared for that as well. But I'm going to participate in this for a breakout trade to the upside, okay, in the direction of a higher time frame trend. Target 6147, the next supply zone. Entering the trade, and we're going to start off with just 5 micro contracts, a half a position, okay? You can do 2, you can do 3 because we're coming up with an economic report, which we may see some more volatility. Now, remember, your Russell trade is on as well, okay? Make sure your stop loss is in place, okay? Russell, we are looking for a bigger move to the upside should we break out of this channel. There will be a higher time frame opportunity to take a breakout above the 23.29. Okay, we got 2 minutes here. Let's set this trade up. 6129 and a half. Okay. Once I'm filled on that trade, I need to come back in and put a protective stop loss. Okay. Or you could set that up ahead of time. Okay. Depending on how you like to do your own order entry. Okay. Some people like to set it up where everything is in place ahead of time. Okay. Now with the economic news coming out, what was it? Chicago Purchasing Managers Index. This is referring to last month's information, not this month. Okay. Always remember that when these reports come out, they're referring to last month, last quarter, or last week. Okay. Not what's happening in the market right now. Okay. These times when these reports come out do offer some good volatility in the market. But the volatility, the spike up or spike down, is looking for orders because right before the economic report, people are not wanting to trade, therefore low volatility, right? So once everybody says, oh, we want to do something, then the market shoots up because of lack of volatility, or sorry, lack of volume. Market shoots up or shoots down to find the unfilled orders, okay? We had great trade on this yesterday. This was the NQ, larger picture, and then we had times where we could maneuver inside of this move up by using some ABC patterns and also using some reversal patterns here, okay? All using Fibonacci measurements, prices and extensions, and so on. If you're going to use that, you might, let's see. Let me, I'll post it in the chat. I think it's the same length. All right, looks like things are a little bearish. Getting a little pullback. We haven't been stopped out on the Russell, still in it, taking a little heat. Come on, Russell, make us look good. Not much of a reaction though, again. Why is the market not reacting so much? We've had some, I mean, these are in history wise, looking back, the PMI, some of the other information out there has caused some pretty big reactions in price. Okay. So something is not right about what the market conditions are doing right now. Okay. Just note that and be prepared that if you don't want to take a $92 risk, that you can take a $50. Okay. You can always get out if you don't like what you're feeling. Okay. I'm going to let the trade work. Okay. We'll see how things play out here. Oh, wow, Callie, you must be getting happy today. Look at that. Miss Chris with us today as well? Do you have a little area right here, 72.17 as the price comes down? We are looking for, and we always have to make sure that we note that 78% of the time when price hits a support or resistance level, we get a little bounce, okay? Using heating oil as an odds enhancer, we can see that price has been basing right here and inside of that dead space, and we're not looking for any zones till we get to the other side, okay? Okay, so crude heating oil breaking that support could help with us that follow through on that trade on crude oil. Let's see what's going on with the S&P. All right, S&P now has I mean, we're still building a fresh accumulation of buy orders, and that's what you're looking at. When we have resistance or support, that can clue us into where we have sellers pushing price down and buyers pushing price up. Okay. The area below our resistance area is where we have a lot more buy orders than sell orders. That's all. Okay. No magic. Just happens to be that in that buy area, there were a lot of buy orders, price gapped out. Now, gaps represent the strongest order imbalance. There were so many buy tickets and no sell tickets that they had to jump price up to find the other side. Okay. So keep that in mind. This is going to be a great demand zone once price comes back down and fills the gap. Okay. But we may not fill that gap today based on what we saw
Order filled.
on the higher time frame. Okay, the price gapped outside the prior day's trading range. All right, I got stopped out of Russell. NASDAQ's breaking out. Okay. Yeah, we're still looking for point C. Okay. I know sometimes when you get it all and your chart looks so pretty, you got to clean it all off, start over again. Boom. And that drives a lot of people crazy. I did so much work putting that together. I get it, but you need a new perspective. Okay. Let's see. We got Apple, NVIDIA, Tesla, Alphabet, Microsoft. Now, what I do with the 8 largest market cap weighted stocks is I look for how many are going in, what do they have similar self-similar patterns. Okay. Right now I can see that Alphabet, Tesla, Amazon, and Meta are showing pretty strong moves to the upside. That's one, two, three, four of them. Microsoft kind of marginally there, and NVIDIA. Okay, so there's still an upward slope. Now, if we're going to start trending upward with the stocks, now remember, why are we looking at stocks? Stocks move first, exchange traded fund follows second. Okay. And then the futures adjust based off of that. Okay. So as we're putting things together, we need to see that futures are always following, they're not leading. Okay. Okay. Just double checking. How we doing on the questions? Any questions? Okay. All right. So we're just trying to find a way to get into the NASDAQ. I'm not seeing it right yet. Rather than just go hit the button, right? Still have our breakout trade potential on the S&P. That is underway. And I will use a stop loss at 6121. Okay. Now look at the difference. You're already assessing if you go long, that's at 129, your stop loss at 121, you got 8 points worth of risk. Okay. Now one mini contract, 8 points would equal what? $200? Yeah. So 1/10 of that would be $20 on one micro. Okay. I'm still feeling a little bullish. I see that there is another leg base down a little lower that was formed during the regular trading hours. I'm going to jump back in on this one here. I'm coming in a little bit late. My risk is going to be elevated.
Order filled.
2308. Wow. I don't think I'll take it all the way down to that level, but it has to be in place in case some black swan event or something really crazy happens. Okay. Once price moves away 1-to-1 or greater, then we can adjust our risk. Okay. Gold, very quiet. Now, my bias to the upside is looking at the exchange traded funds. SPY got a measuring or runaway gap while the Q's got a breakaway. Okay. Know your gaps. Know the difference between a breakaway gap and a measuring or runaway gap to anticipate how momentum will kick into the market. Okay. That's why I went back in on the Russell as well. Okay. My gosh. Wow. How many are participating in? Oh, look at that. Heating oils. We're getting ready for a good move here. Got it. Let's see. Yeah, keep an eye on heating oil. How many took part in open range breakout trade on crude oil? How much are you up? Go ahead and type it in the chat. It's a nice little trade. Now, this is almost like last Friday. Callie's up 900. Nice job. Wow. I didn't take as big a position. All right. Looks like heating oil breaking down. And watch how crude oil continues to pull back. Nice job, Kenneth. Yeah, I'm right behind you there. I got 5 mini or micro. Oh, you got 2 minis? Wow. I got 5 micros. Wow, you're up pretty good. What's that? 82 cents. Let's see, down. Ooh. I think Kenneth, Oh, you've got micros. Okay, I was gonna say, well, Kenneth got you beat, Callie. That's all right. It's a good trade. That's what we're all after. Okay. Now take a moment and notice the price pattern that happened before the move. Okay. How we doing, team? Are you guys in the short trade on crude oil? I didn't have time to set it up. Nice and easy, huh? Yeah, I see that, Callie. Getting a little bit of a move. All right, what are we doing with nat gas? We're still waiting on nat gas. Come back down. Looks like our zones were pretty far away on a lot of our picks. Boy, Dow has filled the gap. Do we have an entry on that one? Oh, yeah, we do. Now, the chart pattern that I just shared with you on the crude oil, the chart pattern, this is the inverse pattern of that. Okay. I want you to see where all the touches here. So I'm going to trace out the structure, and it's just the inverse of what we were seeing on the crude oil. Notice where the three touches of support we're at here. And that price has made a higher high right now, coming back down to this support area. Okay. When price and using the support as that pivotal point. Okay. 78% of the time, you're going to get a bounce. Okay. You're going to get a bounce. What time is it? Well, we're at 10 o'clock reversal coming into play. Yeah. Anyways. Okay. Price breaking that support. We don't have much in the way for price to come lower. Now we have filled the gap on the Dow. Okay. We got 2 minutes till the 10 o'clock reversal. 85% of the time, price changes direction, plus or minus a couple minutes. Okay. Back out to the larger time frame. You can see that picture that price is in a very used up area. Okay. And just slightly above or slightly in that dead space area. So price breaking lower, we would anticipate coming down. Okay. But I'm anticipating a bounce back up. Okay. 1 minute. Now I just have to size the risk. So if I choose to get into the trade right now, I do need to give myself enough wiggle room. Okay. So my stop loss, 45,008. Okay. Now I'm going to wait just a minute or two as price comes down. This is often when we make that higher high and price, if price breaks that support right there, okay, that's a little fake out breakout, then I'll be a little more aggressive to jump into that trade. Okay. Let me come back to crude oil. Now, you see the picture on the chart, okay, and the structure. With crude oil, the little breakout above before
Order
changing
filled.
trend, okay, is what we're looking at. Okay. And just the inverse of that on the other one. All right, let's come back in. You got S&P, got the breakout. Right before the breakout, there is a leg base group of candles. So I'm going to use this 61.23 is my protective stop loss. Right, 6123. And we'll look for that targeted range about 61.47, which is the next opposing zone. Now, you may still have additional risk. Notice the BKX, okay, it's pulled back slightly, bank index, okay. A little more bullish when it's above the moving average, okay, as far as momentum. So this is telling me I got a little bit of headwinds and I'm taking more risk at this moment, okay. NVIDIA moving up, kind of at a high point on the session, but not up a lot. Okay, but the direction is to the upside, and we're starting to see Apple get an uptick. There we go. Apple, NVIDIA, getting a nice little breakout. Stop losses in place. Measure the distance between your entry and your stop loss. When price is above the 1-to-1, adjust your risk, reduce it at least by half. Okay, when you get a 2-to-1, go to a break even. Okay, now what I'm sharing with you there is just some trade management that you have to be very aware of. Okay, how are you going to manage your trade? Is today the market conditions to stay in and let price just run, or should we be looking for just little fast hit and run type trades? Okay, now taking that same distance right there of our zone, once price moves 2-to-1 away, okay, once price moves 2-to-1 away, this zone will become an active zone. So once price does come back down, we'll see that there are potentially some unfilled orders still there, and we'll come back and look for that long opportunity. Okay, you just got a 1-to-1 on the breakout on the S&P. Okay, NASDAQ rocking. Crude oil got a little bounce at that support. Expected. 3 out of 4 times that's going to happen. Heating oils in the dead space, also getting a little bounce off the area where there was some buyers before. Okay. We'll let that one run. Still taking a little heat on the Russell. Come on, Russell, make us look good today. Rally, rally, rally. Russell's kind of the odd one out, but since it's been consolidating for so long, I'm anticipating that this is going to be a stronger move. I want to manage my stop because it could go down and it could go up, but the pattern over here on IWM does look a little more on the bullish side. We had the strong drop. Okay, price basing here does imply that we continue moving up. All right, what else are we looking at here? NQ, S&P making a good run. A lot of other things just waiting for price. Okay, so let's take a look out at our internals. What's going on here? Well, the trend neutral. Wow, the upticks over the downticks on the New York Stock Exchange are almost non-event. Okay. The tick measures the number of up ticks versus down ticks on the New York Stock Exchange, okay? The composite. When price drops down to negative 800, okay, that's where we're looking for a sell program, but sell program going right into demand, or a buy program going into supply. Okay. Right now we're right on that zero line. There's not a lot of upticks or downticks. Okay. So let me remind you what is, that should cause you to be a lot more conservative and pull back. Let's come back to what we started with this morning. Look at the dollars running up while the 10 and the 2-year yield are running down. Okay. This is a difficult market condition to trade. Okay. So kind of see the road signs, and it's not always on the price chart to understand why you got stopped out or why you made money. It's things outside the price chart that we have to keep monitoring. Okay. Dollar going up and the yields going down. This is not a good scenario for active intraday trading. It provides a little more risk. Now, if the 10 and the 2-year yields start moving back up, hey, then and going in the same direction with the dollar, then we'll have a better direction and probably a lot better trending conditions. Okay. So everything that we're taking right now, okay, with the equity indexes, we need to be very careful with, and also understand that the risk is elevated in trading it. Okay. All right. Now let's come back in on the Dow. I have a place I can put my protective stop loss. Let's see if the Dow futures, right now they're trading flat. Okay. And we have 8 Dow stocks up over 94 cents. 1, 2, 3, 4, 5, 6, 7. Dow is pretty much balanced out. Okay. So futures are not oversold or overbought relative to cash at the moment. Okay. So make sure you see where your stop loss is at. I'm going to participate in this one with just, I'll just keep my positions right around that 5 micros. Buying at the market.
Order filled.
And placing my protective stop loss at 45.27. Are you noticing about what I'm willing to risk right now? What's the average dollar amount that we've been risking? Yeah, it's roughly about $100, $200 on a trade. But the position size is small enough to be able to handle what I need as wiggle room for risk on the trade. Now, the nearest leg base on this Dow, okay, is right up here. You see the leg base group of candles. Price made a higher high. Okay, so we're going to still target that 45,135 as that first range we need to get through. Okay. Dow on a larger time frame, we did fill the gap. We came back down to the close of the session, and we're looking to participate in going long. Okay. I use a small time frame to identify my risk to participate in that trade. Okay. Now, for this demand zone to be active, okay, price must move away greater than 2 to 1. Okay. Price has moved away greater than 1 to 1 already. So let's take action and reduce the risk on the trade. Our risk, $162. I'm going to adjust up to make that about half. Don't want to go too far. I'm just going to risk. Now we're at about $81. Okay. First initial target, 2 to 1 move away, 61.41. Our opposing zone, 61.47. Anybody take the S&P trade? Yeah, didn't participate in the NASDAQ, but you can see right here, see that resistance area? Now, please don't feel pressured that you have to make a trade. If this is the first time you're watching what we're doing at marketinstitution.com here, is I want you to see the price patterns and what we're looking at. Okay. The implied that we're doing here is this is an accumulation of buy orders. Okay, that's why it's colored green. And we had sell orders holding price in place. Okay. Once price took out the sellers, the buyers were left over down below. Okay. Therefore, this picture implies to me that somebody with a lot more money was holding price in this range. Price got away from them and they just kind of waited till it came back down to where they could make the deal work. Okay. This picture is common. I went back 100 years on the Dow Jones Industrial Average, looking back all the way to the 1900s. The pattern has not changed when banks and institutions are involved. They leave a footprint. Okay. They do not get their orders all filled at one time. Okay. So where they're building a position, price runs away from them, they have to wait till price comes back. Okay. All right. How are we doing on crude? All right. Got a little bounce. Okay. Old support becoming new resistance. Possibly. Okay. Still looking for price to continue on down. 71.49 is where we want to hit the reverse button. Okay. Notice heating oil doing about the same pattern, but in a way it's that pattern is playing out before crude oil. There we go. Russell finally getting a move. Okay, at least we're showing some green. We have moved 1-to-1 away from the proximal line. I did take this late. Okay. But I'm going to still go ahead and reduce my risk by about 50%. I don't want to give it all of this down here. Okay, so I still have $100 worth of risk on Russell. And we have the Dow, which we're also in. $68. Okay, so yeah, I still need the Dow to get up to about 135 before I can reduce the risk. 27, we're still looking at about $100 risk. Okay. And the market now kind of going into that sleeper mode. But all the work that we put in this morning to understand the market conditions, using our pre-market routine to help us manage risk. Oops, I want that green. There we go. And our potential rewards. Okay, now with the Dow, I'm going to use a little larger picture on here for those that are not or that want to get in with a little more structured move. Let's maximize this. Remember, we started showing that there was a lot of those ABC patterns, okay? And a lot of times those ABC patterns have to happen by using kind of a map. Now, I just showed you this earlier on a trade that we took, basically the same chart here. Notice if we outline this, we had drop to base, base to rally, rally to the retest. Now that higher low, let's take a measuring tape, put it on there. Let's find that higher low. I'm pretty sure that's close to an 88.6% retracement. Okay. So right at the 88.6. Okay, so let me outline how this pattern often works. You have the drop to base, base to rally, rally to retest, making a slight higher low. Then we have our first initial wave one. Okay. Then we're looking at a pullback. So the way that this works, as far as the geometry on here, is we got X and Y as where our first reference point, drop to base, base to rally. And then we have the A point equals 88.6 retrace of X and Y. Okay, got that. That's right down here. Okay. A equals 88.6. Okay. Now after that, we look for the B off of that move. B equals 113 or 127 extension of the prior swing, Y and A. Okay. So we've accomplished B point. So what we're looking at right now is at C point. Okay. C equals 38.2, a 50% retracement, or 2/3, 61.8. Okay. And then we have the D point. Yeah, getting a little pullback on that. All right. D equals 161.8 or 224 extension of what started this from Y to X. Okay. So the trade pattern that we're looking for now is this map. Reversal trending. Okay. So if you're an Elliott wave enthusiast, okay, or study an Elliott wave, okay, the B point is wave one. The C point is wave two. Always remember, you can never start an uptrend without a reversal pattern. You can never start a downtrend without a reversal pattern. Always remember, when it comes to Elliott wave and recognizing what reversal and trending patterns are, okay, that doesn't always mean it's going to be a successful trade, but you have a map. And when we understand where we are on the map right now, you'll see why I was a little more aggressive at getting into that. Okay. Then we still could be basing. That's why we have our stop loss down there. Okay. One of the rules that Elliott puts out there is wave three is never the shortest wave. It's not always the longest, but it's never the shortest. Okay. So reversal trending, and then we come into a continuation pattern, okay? So watching this closely, high opportunity that wave 3 is not going to be the shortest wave, okay? And this is why I'm a little more aggressive in getting it. It's a picture on the price chart. Now, we still have to manage risk, and we still do have risk on the trade. Hi, Gary. Let's see. How do you use your Fibonacci tool in this illustration? Okay. Now, different platforms may vary. Okay. When
order filled,
I think we just got stopped out of Dow, right? Different platforms may vary. With this platform, the first click using my Fibonacci tools is going to be from is the zero line. Okay. So I bring up my Fibonacci tool and I go from low to high. Okay. And we put the values on it. Turning them all on. So on. Okay, putting those values on it. Label, there we go. Okay, with this platform, okay, and other platforms vary, okay. The first click is the 100 and the second click is the 0. Okay, so when I'm illustrating out here on this particular pattern, I'm going from X, my first pick, okay, the 100 line, and then going back up, this would be 0, okay. Price pulling back down, I would look for that 88.6 for that reversal pattern. I like questions like this, okay? Most often when we start an uptrend, we have a reversal pattern. Now, this will take a little bit of time to train your eyes. What you're going to look for is basically a pattern like we're showing here, drop to base, base to rally, and then price coming back down and making a slight higher low, okay? So by taking that measuring tape, you can verify that that 88.6% retracement comes into play quite often, and it builds off of itself, okay? So for the engineer type traders, okay, we still in the Dow? What's the Dow? I adjusted my stop. Oh, thanks, Greg. Yeah, Greg's been doing a lot of study on that recently, and Gary, Greg put some pics in the general chat. All right, I'm gonna come back. I'm still a little more aggressive on this. We got stopped out of this
order filled,
stop loss 27. But Gary, if you're in our Discord room, just ask the questions in there. I can take the time and cover a little bit for you. Okay. Now you'll find we're pretty approachable and easy to work with. Yeah. Your success gives us our success. Crude oil. Okay. Now you have to make a choice now. Getting we're about if you want to stay with crude oil or look for the next price pattern. Because right now we do have the drop to base. We got the ABC pattern that's lining up. Okay. So you could take a profit if you choose. You could stay in, your stop loss is still going to be a small profit. Okay. And anticipate that move back down using the ABC pattern. S&P still rising. We have not gotten a 2-to-1 yet. Okay. We have reduced, we got $81 risk on the trade. Looking for 641 potential reward. Okay. Oh, nice. How many stayed with the Russell? Beautiful. See the price patterns? This is what, if you're viewing what we're doing, you should be looking at what the trade setup is and how we manage risk. Not just looking at, oh my gosh, he's making money and jump in. That's not what we're teaching here. The things that we teach are a forward-looking technique. We use a lot of patterns and structures that have consistently shown themselves over and over again. Okay. With this much profit, I do not want to take a loss on this trade at all. Okay, so I'm taking my risk up to a break even. Cover some commissions too. Okay. Have that plan to adjust your risk. Okay. Now I'm pretty bullish on this. If we continue up, Russell has a big, wide open area. This is a trade I want to be able to stay in the rest of the day. Okay, through the ups and downs. But at any time, you can take a profit. Just got to hit the button, right? Looking up and left. Why do I say we got a big open range? We still have a little obstacle here from our resistance area. Let's go out to a little larger time frame. Okay. Here's our resistance. We still have to get through that. Now, once we get through this resistance, okay, look over to the left, and we just have this big pocket of points. Fast, low volume price drop. Right at the origin of that is where we have our prep screen zone that was formed during the regular trading hours. Okay. We do have an unfilled opening gap still that comes back to the 17th. Okay. And we have a nice next prep screen zone be up much higher. Okay. PBJ, are you talking about peanut butter and jelly? Did anybody participate in the Russell trade? I mean, that's a great trade. 5 micros. Beautiful. All right. S&P still just slowly grinding. Now, if you are new in observing what we do not just take trades based on what I'm doing. Okay. I have a plan. Okay. You need to understand what our plan is and how we manage our risk. Okay. It's exciting to be able to demonstrate these market moves and anticipated turning points using our strategies. Okay. But there is a little bit of a learning curve. Okay. You got to put the pieces together and verify the information. Still waiting on watching that heating oil. And I don't want to just get a break even. I want to lock in a little bit better. Okay. And here's a quick one for you. When you're using that ABC tool, okay, and you're seeing, hey, price dropped and we're getting a nice little bounce, okay? And we have a price target in mind. How far would price have to move up to get that 100% retracement back into the zone? Yeah, about that 72.53, okay? So you can use this and say, okay, well, it's right here, but it goes below the targeted range, the opposing zone. Okay. Well, where would it have to go up to line up? Okay. It's different ways to think. We're just a forward looking. We're looking for where we're going to get into a trade and where we're going to take profits and adjust stop loss. Ooh, man, come on. Oh man, I've been waiting for this, Russell. Okay, things will get a little bumpy as we break the Globex high and go through a used up resistance area. Okay, just realize that there's still a little traffic congestion. Price breaking above that, as we just demonstrated, we have a large pocket of points. Nothing in the way to get up to that. Okay. Let's see if we can stay in this all day. Yep. All right, NASDAQ. Hey, good to see you, Frank. Good to see everybody over there. All right, so we're starting, let's take a look at the NASDAQ, I missed. Just, there's no way to get into it. Okay. Who can remember what the clue was to take this direction? What was the clue? Was it to stay in an upward direction, even though we had a gap up? Outside day gap up. Okay, that is one piece of information. Was it on the cues or was it more on the index? Okay. See, when we started off this morning, okay, we noticed that the cues had a breakaway gap to the upside. The SPY had a measuring or runaway gap to the upside. Okay. Leading that don't try to take short trades off of this. Okay. Unless you have a very strong opposing zone, and it would still be a counter trend trade. Okay. Now we were able to splice into the S&P on a small time frame, but I missed the cues. Okay. That doesn't mean chase it. Russell looking to break a long-term resistance, and I hope it does it. Okay. ETFs are a great odds enhancer in the pre-market, looking at where they're gapping in the pre-market and then anticipating what was happening in front of it. What type of a gap is it? Is it a runaway gap? Is it a breakaway gap? Is it an exhaustion gap? Okay. You know what? I didn't get any of those trades in my prop account. Darn it. Sometimes teaching can get expensive.
Order filled.
Oh. Good. Oh, I got stopped on the crude oil. Yeah. Okay. Still netted a profit. Oh, I'm sorry. Yeah, time check. Are you guys having fun? Are you learning something and trading? Well, let's take this over to our Discord room, okay? And I'll continue on over there. Everybody will have a voice channel, okay? But I do need to wrap up our day. Now, we did have some pretty good trades. We're still in the S&P. We just got a 2-to-1. Okay, so let's make sure that we adjust your stop before we wrap up our session. Okay, I'm gonna lock in $100 there. I see that the opposing zone 61.47. Okay, that's where I expect things to slow down a little bit. And in order to get up here and continue beyond on the S&P, you're going to need some help from the stocks, okay? Especially Apple, you're going to need to see it moving up in that direction to support it. And also look at the bank index, see if it continues up. Russell, I'm going to do my best to stay in this the rest of the day. I'm going to have to sit through some of the little pullbacks, okay? Once price starts to break out. Okay. All right. What else are we in? We have Dow, Russell, S&P. Okay. Yeah, Dow's going to be a little more tricky. I'm going to adjust my stop up on this. We got about 45.50. All right. All right. Well, I wish everybody a happy Friday. We had some good trades, good examples, a lot of little lessons along the way. I hope you enjoyed our live stream. Please join us again next week. We're going to do live stream Fridays going forward for right now. And join us over in the Discord room and we'll continue our day. Have a great day, everybody, and happy Friday. Nice job on your trading. Good job, Callie. Bye now.